Now then, as we mentioned just before the break, there has been some breaking news in the past few minutes. In a significant move for the US economy, the Federal Reserve has cut interest rates for the first time in 4 years. Let's speak to our North America business correspondent, Rikita Gupta. Hello to you. Please break down this decision for us and any initial reactions. I know the news has just broken.
Well, Sarah, it was a super-sized cut. So we got a 50 basis point cut to interest rates and a promise of another 50 basis point cut by year end. So we're taking us to the target range now of 4.75 to 5%. That's down from 5.25 to 5.5. And this is the first cut in over 4 years. And if we look at the market reaction to this, initially we did get a knee-jerk reaction of stocks going higher off the back of this. It was seen as a fairly dovish cut here, and the dollar also falling off the back of it. The Federal Reserve also saying that it sees interest rates at 4.4% at the end of the year and 3.4% in 2025.
Just take us through the significance of this particular drop, and as you say, a big drop.
Yes, it was a historical decision, and partly because there was so much indecisiveness going into this, whether we would get a 25 basis point cut or a 50 basis point cut. And we got the more aggressive 50 basis point cut. But usually there is much more consensus around this, and the Fed would signal that to the market ahead of time. But we didn't get that in this case. Perhaps the Fed itself did not know what it was going to do. But again, the first rate cut in over 4 years since the pandemic, bringing rates down from a 20-year high or so, and that too right ahead of an election, Sarah.
And Ricky, what does that tell us about the state of the US economy at the moment?
Well, what it's suggesting is that the Fed is concerned about the risks of growth to the economy. Again, it has that dual mandate of ensuring full employment whilst also keeping inflation in target. We've seen inflation start to recede, start to moderate. The central bank did say expects inflation to return to target next year. So perhaps it is focusing more on employment and any risks to slower growth for the economy.
Okay.